Hey, it's Clay at claytrader.com. This will be my top 10 stocks as we head into Tuesday, June 20th. Friendly reminder, the markets are closed on Monday. This will be a technical analysis breakdown, so if you are someone that uses charts within your trading, or maybe you're just interested in learning more about charts and how they can be used as a tool to help make good decisions as a trader, this will be a video for you. First off, a couple of clarifications. Number one, the price you see over here will be changing, and the candlestick you see right there will be moving around. That is because the market's still open for a small amount of time, but I like to do these videos when the market is still open because sometimes we can capture some really interesting late day price movement. And then second, I'll be using the 30-minute time frame, meaning each one of these candlesticks here represents 30 minutes worth of time. So stock number one here, SPCE, big news yesterday, had a big gap up, and then essentially today was a gap and trap where the price opened up all the way here, and then from there basically just dropped and dropped and dropped. But what has made this now interesting moving forward into next week is the price has at least started to go sideways. Now let me be very clear, and I wish I could say trading was this easy. Just because the price is starting to go sideways after dropping does not mean for sure guaranteed this is the bottom. My point here is that it at least becomes plausible. It's at least a rational thought that, okay, maybe just maybe this is some sort of bottom, and maybe just maybe this thing is getting ready to try to bounce back to the upside. So if you like to play these scenarios where there's a big pullback and then the price signals that it may be trying to bottom out, then I would definitely say this is one of those scenarios with the key level of support being right there at $4.50. So yeah, if you believe that this is some sort of bottom, I completely understand why you would be thinking that. Nice sideways action, so worth keeping an eye on if you like this price range. Next, NKLA did this one yesterday, and you can see that the price ultimately now has come down to that green line, which I drew in yesterday's video. And to be fair, for a while, did a fantastic job of holding up above it. You can see that entire time there, held above it. But when that green line finally did give up, you can see now the rest is history. A bigger pullback here has played out. So I'm going to go ahead and get rid of these lines as they've served their purpose for now. Actually, I'll just bring this line here down because now the near-term level of support, of resistance, if there is any sort of bounce, going to be right there at the $1.25 mark. So again, any sort of attempted bounces, $1.25 going to be that first key roadblock that'll need to be cleared in terms of levels of support. If this pullback continues, next key level that stands out to me right down there around the $1.03 mark, which is coming from this area of the chart where you can see it was basically the bottom part of that consolidation right there. But yeah, overall, another gap and trap. Price gapped up, opened right there, and then from there, just bled all day long. So not just a question of, pretty much how deep is this bleeding going to get? So we'll see what next week has to offer. Next one here, MULN, and I'm not going to say it's totally game over, but it's looking pretty shaky. This movement right here was strong, was fantastic. There's no doubt about it. However, at this point, it's really looking like basically a dead cat bounce. What gives me the right to say that? Well, where did this whole move start? Well, essentially started right down around here. So if I just kind of extend this line out, is the price back at that yellow line? It is not. So I can't say quite that the price has gone right back to where it started, but it's very, very close. So meaning next week, if the price does go down to that level or worse yet, breaks down below it, at that point, the price would literally be right back to where it all started right here. And not to insult your intelligence, but price movements with genuine power are going to make progress forward. Not go straight up, but at least make progress forward, not go back to where they all began. And that's what this level here is representing. So moving forward, this area right down here around that 22, 21 cent mark, I would consider a must-hold level. In terms of levels of resistance, like I talked about yesterday, that purple line did indeed act as resistance. So if there is any sort of attempted bounce upwards, you're going to want to continue to watch that purple line there, which is the 50-period moving average. Next one, FFIE. Very, very nice day today. And you can see from the pattern I drew yesterday, got the breakout of it earlier on in the day, and then very, very nice continuation. Bit of a pullback here. So the one people that, the chart's looking bad for is if you're some sort of day trader, flipper, scalper, and you suffered from FOMO and you were buying right there and hoping to buy and sell within 5 minutes. From that perspective, yeah, the chart looks bad. But for everybody else, the chart is perfectly fine. This pullback here, nothing can go straight up. Pullbacks happen, but as long as higher lows are built, that's what matters most. So we'll get rid of these lines right here. And the newest level of support that I would call the ideal level, when you say, Clay, what would make this chart look the absolute strongest going forward? And that would be if the price could stay up above that level right there at 42 cents. So watch 42 cents again. That'll be an important level. Now, if the price drops below there, that does not destroy the entire chart because from the overarching standpoint, just watch that purple line there, which is the 50-period moving average. Keyword there being moving. So as time goes by, that line is going to move itself higher and higher. And from the overarching standpoint, as long as the price remains above that moving average, the overall trend is fully in the bull's favor. Next one, AMC. And overall, a rough day here, but it's hanging in there, and I'll explain what I mean by that. As far as this trend line here, yeah, it never really did play any sort of major role, so Probably got that not probably, I got that trend line wrong. I thought it'd have a little bit more significance than what it did, but it just kind of turned into mishmash. But the level here in the dynamic that you got to think a lot of people are watching, why I say that it's holding on, has everything to do with that pink line right there, which on my chart is denoting the very famous, the very well-known 200 period moving average. And even if you have a basic understanding of charts, I'm sure you've heard of that moving average, and you know that when the price is up above that level, you want to see it act as support. And so far, so good. Acted as support yesterday, acted as a support this morning, and as I speak right now, acting as support this afternoon. So that's going to be the big question mark going into next week. Can this level continue to hold? Because you know there's going to be bears that are, thinking, okay, if this breaks, I'm going to want to get short or do puts or whatever. But there's also going to be longs, rightfully thinking, well, it's a bounce from here many times before. I think it's going to bounce. So that's why risk management matters, because somebody's going to be right, somebody's going to be wrong, but you got to just manage that risk and build quality trade plans. But that doesn't take away from the fact that you got to think head into next week, all eyes are going to be on that 200 period moving average, currently valued at $4.69. Real quick, want to take a break and personally invite you to get signed up for this free live online class that I'm offering next week. So if you've been enjoying what you've seen and you want to learn more about this tool, how it can and should be used to manage risk and build consistency, then definitely get signed up for the free live class. If you're watching on YouTube, there's a link in the description box, or if you're watching at my site, there's an area right there on the webpage you can click to get signed up. So like I said, if you've been enjoying, definitely get signed up for the free class. Next one, TSLA Tesla, and once again, back to doing its good old thing of putting in higher highs. So the uptrend continues. Although what I'm curious about, and I'm going to put this here, this will probably cause some people to get upset, but I understand. But it is what it is, just a technical pattern. You don't have to agree with it. Whoops, let's change that to there. So we have that level right there. And then we have that dynamic right there. You could get a little bit more aggressive if you wanted to and do something like that. But like I said, I think that's a little too aggressive. But there seems to be what I'd call a poor man's rising wedge, which is a bearish pattern, which suggests that this thing needs to pull back a bit more. Now, keep in mind, before you start getting all upset in the comment section, pull back and reversal, not the same thing. This right here was a pullback, proved to be healthy. That right there was a pullback, proved to be healthy. So if this thing pulls back here, or even a little bit more than that, that doesn't mean that the entire chart's crumbling or falling apart. I'm just saying that in the very near term, this pattern is starting to suggest that a bit of a more of a pullback is going to be needed. But it is Tesla, so who knows? Maybe this thing's at like $500 by Friday of next week. You never know with Tesla. But like I said, if I were forced into a corner, I would say that Tesla definitely needs to pull back a bit more. And, I'd say look for that in the earlier parts of next week. Next one is AMD, and going to go ahead and get rid of that line for now as it served its purpose and get a new trend line in place here. I have to try to split some differences here. So maybe this is not as obvious of a trend line as I thought it was. But broadly speaking, right there seems to be doing a good job of showing kind of the lower highs that have been putting in. So yeah, this thing has made several bounces over the past couple of days. Nice bounce, but rejected. Nice bounce, rejected. Nice bounce, and then today rejected. So there's definitely some selling pressure that has shown up. But with all that being said, let's keep things in context from the big picture point of view. You can still very clearly see that the uptrend is up, and this is not the first time there's been a pullback. There's a pretty big pullback, was healthy. There's a pullback, was healthy. No, that doesn't mean that this pullback is also going to be healthy, but I'm just saying that you don't want to go overboard and think that it's the end of the world. But I will also say the one difference here with this pullback is this pullback has now violated down below that pink line there, the 200 period moving average, where all those other instances you can see the price has been staying up above that pink line. Does that guarantee anything? No, there are no guarantees, but it does, like I said, make it maybe a little bit more of an apples to oranges comparison. So if there is any sort of bounce, then keep an eye on that red line right there as the key trend line. As far as levels of support are concerned, if this pullback continues, the next level that you got to think probably a lot of people are going to be watching right there around that 116 mark. So overall, not a great week. The selling pressure has shown up, but big picture-wise, the trend remains intact. Next one, MARA. Very interesting setup here as we head into the weekend. Good solid surge up and is now consolidating out. And the location of this consolidation, what makes it very interesting, because it's essentially right at this area of resistance right here at $10.05, give or take a little bit. But just looking back through the history of the chart, you can see that this area here has just, presented a problem. Whenever the price has gotten up around this general vicinity, the momentum just essentially disappears. And same thing happened today. It could never quite push up through here. But like I said, the good news is the price is still well within striking distance. So does that guarantee anything? Of course not. But does it make it rational? Does it make it plausible that maybe, just maybe, another breakout is coming of that level? Absolutely. And then if I just draw this real quick, so there's our resistance, there's our support, there's a surge up, there's a golf hole down here. So very poor drawing, but basically a little bull pennant pattern has formed right below this key area of resistance. So if you like these sorts of potential breakout scenarios, I'd certainly keep an eye on it. Next one, EVLO, and this is one nasty, nasty looking chart, but very ugly. However, I know some of you know what I'm going to say. There can be opportunity in the ugly, and the price is essentially right at that level. So big, nasty pullback, but the price has essentially pulled right back to this former breakout area, which also happens to be where both of these moving averages are sitting. That pink line, the 200-period moving average, purple line, the 50-period moving average. So you have lots of supports right here. Does that mean that it'll come down and then bounce? No guarantees. But is that a very rational area? Absolutely. So if you like to play these scenarios where the psychology is everybody's giving up, waving the white flag, which, have you noticed where it seems like when things can't get any worse and it's just going to keep on getting worse, then all of a sudden bounces and stuff happen. So that's kind of one of those questions where right there, is that going to be the point where everybody capitulates, gets out, and then all of a sudden there's some sort of snap back up? No, maybe not. Maybe this thing keeps drifting. That's why risk management matters. You don't want to become a bag holder. But from a risk-reward scenario, meaning if you do even get a modest bounce compared to what was being risked, you could be looking at a very nice risk-reward ratio. Next one here, TQQQ, which is an ETF that measures the NASDAQ market. So if you believe that the NASDAQ market as a whole is going to rise, this one will also rise. The biggest difference is it just allows you access at a much lower price point, which makes it a very popular ETF. So yeah, the NASDAQ started off strong today, but then eventually did roll back over. Now, again, kind of tricky to talk about because it depends on your perspective. If you're a day trader, flipper, scalper, and you're buying at the highs this morning with the goal of, buying and selling within 20 minutes, well, then from that perspective, yeah, the chart looks really, really bad for you. But if you do care about the bigger picture point of things, yeah, the price rolled back over, but I mean, it hasn't even violated the support level that I talked about a couple days ago. It hasn't violated the 50-period moving average. So as of now, I would just chalk this up to a healthy consolidation, a healthy pullback, because again, no major areas of support have even been tested, let alone violated. So moving forward, those will be the couple areas to keep a close eye on, right around that $40.35 mark. In terms of areas of resistance, this red line that I put into play, right there at 42 did indeed act as resistance. Price gapped above it, yes, but after the price fell below it, you can see that level went right back to acting as resistance there, and then once again right there. So if the price does get any sort of bounces next week, that first key battleground to watch will be right up there at the $42 mark. So again, assuming that you weren't somebody that was buying the gap up today from a day trading standpoint, the overall chart is still perfectly fine. So that wraps up the top 10 list. Again, if you like what you saw here, then I want you to go get signed up for the free class. It'll be next week, Thursday, June 22nd at 7 p.m. Eastern time. So I hope to see you there. As far as these top 10 videos are concerned, if you enjoy these, please help me out by communicating to me that you do enjoy by hitting the like button and then leaving a basic comment. Tell me what you traded today. Tell me what you're watching next week. But those two things help out to communicate. They help out the channel, and I really appreciate it. So go get it signed up for that free class. Have a good weekend, and remember, the markets are closed on Monday.